the Fed at its last FOMC meeting announced that QT is officially ending in December. So I think another big catalyst will be the launch of the next round of quantitative easing, which I believe is coming. I thought it would have actually happened already, so I'm kind of surprised they were able to make it through the entire year without doing it. But I think 2026 will be the year that they, crank up the presses again, especially if they continue to see weakness in the long end of the bond market. And then, of course, you do have, some court decisions, on the tariffs, on the firing of Lisa Cook. I think that could have implications for the dollar and for gold.
Gold's run in 2025 has already rewritten the playbook for this entire decade. While tech stocks whipsawed, bond yields spiked, and geopolitical tensions escalated across nearly every region, gold behaved like the only adult in the room. It pushed to new all-time highs, not once, but repeatedly, outpacing the S&P, outperforming the Dow, and even eclipsing the gains in energy and defense equities. The story of 2025, for anyone paying attention, wasn't the stock market's instability. It was gold's refusal to bend under financial pressure central banks bought aggressively. Sovereign wealth funds quietly rotated, and retail investors, for the first time in years, began to understand that gold wasn't reacting to crisis. It was pricing in what comes next. Yet even with gold's dominance, the real excitement brewing beneath the surface has been silver. Still coiled, still undervalued, still wildly mispriced compared to the metal it shadows. Peter Schiff has said repeatedly that 2026 may belong entirely to silver, in the same way 2025 belonged to gold. And if that prediction holds, the setup becomes extraordinary. Silver has lagged the gold move, but that's exactly what happens at the beginning of every major cycle. Gold makes the first breakout, institutional money notices, and then silver, thin, volatile, tightly supplied, becomes the most explosive asset in the entire commodities space. If silver only mirrors gold's percentage gain this year, it would already be a headline event. But that's not the argument. Schiff believes silver doesn't just follow gold, it overperforms it. And in a year where gold has already outpaced equities, bonds, real estate, crypto rotations, and most commodities, a world where silver becomes the best-performing asset of 2026 would mean a structural repricing, unlike anything we've seen since the early 2000s. Silver's fundamentals support that outcome: shrinking above-ground supply, massive industrial pressure, and an investment crowd rediscovering the metal in real time. And this is where the macro picture shifts from interesting to inevitable. Because while the metals market is already primed for a breakout, the real accelerant may come from a familiar source: another round of quantitative easing. The Fed ending QT in December has set off alarms across Wall Street, and the expectation of fresh liquidity in 2026 creates the perfect storm. Gold lit the match in 2025. Silver may ignite the explosion in 2026. And if Schiff is right, QE could be the force that turns this precious metals bull market into the monster rally investors have been waiting for. But before we dive in, if you're watching this and you own even 1 ounce of gold or silver, hit the like button so this message gets to more people, and make sure you subscribe, because next year's metals market may be the most important of your lifetime. We appreciate the support and hope you enjoy the video.
Well, even, characterizing it as a pullback, we're at 3,950 as we're talking. We've only pulled back from a level that we reached for a day. Right? We had a quick move up, but the fact that we're just below 4,000 doesn't really feel like it's a pullback. It's only a pullback in relation to the fact that we almost hit 4,400, which was crazy in that it only took us maybe a week to get there from hitting 4,000. So if you throw that week or two out and just look at where we are, we've gone up a lot on the year. And I think sentiment, it's interesting how such a sharp decline can turn the sentiment to get everybody thinking that this is now potentially a bear market already in gold, and that there's a lot of downside risk. I think that's kind of what the market was trying to do in shaking out some of the newer entrants that may not really have the conviction, or maybe came in with some leverage and have been flushed out of the market. But we've created a lot more, I guess, nervousness so that we can climb that wall of worry. And so as far as I'm concerned, if this is a correction, it's probably already over. I don't think there's that much downside in the price of gold from here. And the same thing with silver. I mean, silver didn't hold above 50, but it did take out 50, which is something it never did really in 1980 or 2011. We got almost to 55. And now we've had a pullback, but we're holding 48.50, which if you told people even a few months ago silver would be at 48.50, they wouldn't be, oh my God, it's pulling back. They'd be very happy that silver was at this price. And especially the gold miners. I mean, gold pulling back to 3,900 is great for all these gold mining companies. They're making a ton of money at $3,900 gold. They're making a lot of money at $2,900 gold. And that never really got factored into the price. I just think we're early in a broader bull market. I think that investors, mainstream Wall Street investors, both institutional and retail, are just finally noticing gold and deciding that they should make it a part of their portfolio. And this is after, gold is up, 11, 12x this century. The Dow is down, close to 70% priced in gold since peaking in 1999. So gold has outperformed the markets, yet investors haven't even noticed that really until just recently. And I don't think that the fact that they've now decided that gold should be included in a portfolio, whereas before it had no place in a portfolio, I don't think that is going to change because, oh my God, now gold's 3,900 and not 4,300. I think you're going to start to see more accumulation of gold from investors who never bought any. And I think the central banks that have been the drivers for the past couple of years, I think they're actually going to pick up the pace of their gold buying. I think more central banks that weren't buying gold are now going to start buying as well. So I think there's a lot of new demand coming from gold, and I don't see a lot of new supply. I mean, there's some, but not nearly enough.
People who come to this event, people who are in gold, they're usually used to being the contrarian. So if they see the mainstream coming in, maybe they feel a little bit uncomfortable. So anything you'd say to those people?
Well, I think it's still contrarian in that now that the mainstream is dipping its toe in the water, it's still, a small percentage of mainstream investors. So I think we've got a ways to go before it's kind of a crowded trade. If you want to see, something that seems crowded or bubblicious, look at what happened in crypto. Look at the enthusiasm. This is, I think, the oldest gold conference. It's been going on for, 50 years, the Orleans conference. And there's more people here than last year, I think. But there's not 1,000 attendees. It's less. I forget, 600, 700. I was at the Bitcoin conference in Las Vegas over the summer. There were 35, 40,000 people who paid to attend. So we're nowhere near there. We don't have that kind of level of interest or enthusiasm. And when I was at that conference, nobody was worried about the Bitcoin price going down. I mean, everybody was 100% convinced it was going to 1 million or higher. But here, you get a lot of people at the gold conference. Well, they're nervous that we could get a pullback, and they're not like crazy enthusiastic that we're going to be at $10,000, $20,000 gold next year. So I think it's still early. The people in Bitcoin they're convinced that they're early. And I was trying to point out, well, you have 35,000 people at a conference. It's not early. I've been going to investment conferences. That's the biggest one I've ever been to. And so that shows you that, a lot of people are already involved. You're not getting in on the ground floor when the conference is that big.
The most important thing to understand about Schiff's view is that none of this is about hype. Markets have been trained to think in short, frantic cycles, but metals move on deeper, structural currents. Gold's surge in 2025 wasn't a speculative blow-off, it was a repricing of confidence. Silver's delayed reaction isn't a weakness, it's a pressure build. The minute liquidity expectations shift and the dollar weakens under the weight of expanding balance sheets, silver doesn't simply rise, it launches. And the first signs of that shift are already visible. Investors who ignored silver for years are suddenly tracking it again. Industrial users are locking in long-term supply. And the bond market, the true heartbeat of the global system, is flashing signals that scream stress rather than stability. When that stress meets fresh liquidity, capital has to move somewhere. That somewhere is rarely stocks during late-cycle pivots. It's rarely bonds, but historically, it is always gold first, and silver right after.
Yeah, well, we just got a rate cut by the Fed, and that didn't seem to be the trigger. I think we're going to get another rate cut, despite the fact that Powell kind of said it wasn't a lock. You know, the markets kind of priced it in, and he kind of pushed back against that. But at the end of the day, I think there's going to be another cut because I think the economic data is going to continue to disappoint. Now, we're not getting as much data as normal because of the government shutdown. But it's possible that they end that government shutdown and we get a deluge of bad economic data that could be a catalyst for another move up, in the price of gold as people start to, factor that in. And the Fed at its last FOMC meeting announced that QT is officially ending in December. So I think another big catalyst will be the launch of the next round of quantitative easing, which I believe is coming. I thought it would have actually happened already, so I'm kind of surprised they were able to make it through the entire year without doing it. But I think 2026 will be the year that they, crank up the presses again, especially if they continue to see weakness in the long run of the bond market. And then, of course, you do have, some court decisions, on the tariffs, on the firing of Lisa Cook. I think that could have implications for the dollar and for gold.
So do you think quantitative easing starts under Powell, or do we wait until his term is over? We've got this new Fed chair in that's probably going to be more Trump aligned. How are you seeing it?
Yeah, it's hard to say. I forget when does Powell leave? Midway through the year, May? I mean, I guess it's about 50-50 that, they can hold off on QE. It kind of depends on what happens. But I think if you start to see a big move down on the stock market or something that might scare the administration, there'll be a lot more pressure. And we'll see. I mean, today, we're getting a decent decline in stocks. I know Bitcoin, broke below 100,000 for the first time in about 4 months. And, that could be a bit of a leading indicator that, people are starting to take risk off. And it may not just be crypto. It may be a broader based risk off trade, which also could see some money flowing back into gold as a safe haven investment. And I think as the air comes out of the Bitcoin bubble and people begin to question the digital gold narrative, which they should, because it's just a meme, to the extent that people wake up to the reality that Bitcoin isn't digital gold, well, then maybe they'll buy real gold instead. And so there could be a source of some extra gold buying from people who either get out of Bitcoin or instead of buying Bitcoin, decide to buy the real gold, right? Instead of some fake version of it.
When you look at the U.S. economy, how bad are you thinking it could get? What's your vision there?
Well, I mean, I think things are pretty bad. I mean, if you look at the most recent polls on Trump's approval, his approval on the economy is the lowest it's been of either of his presidencies. He only has a 30% approval rating. So that's not even like all the Republicans. And over 60% disapprove of his handling of the economy, right? Just the economy. That's supposed to be his strong suit, right? And, Trump is going around, touting how we have the strongest economy in the history of the country, right? We have the hottest economy in the whole world. And he contrasts that to the Biden economy, which, we had last year, And he said that was the worst economy in the history of America. So apparently, in less than a year, we've gone from the worst economy in the history of America to the greatest economy in the history of America, yet the voters don't approve of his handling of the economy. So somebody's not, telling the truth, right? Either the public loves the economy, but they're afraid to be honest with the polls, or that's one area where I trust the public. I don't trust their opinion on a lot of things, but I trust them to know how they're doing themselves. Because when they're asked about the economy, they're not talking about the overall unemployment rate or inflation. They're talking about their own individual circumstances, right? And so they're answering that question based on what they're experiencing in their own lives. Are things getting better for them financially? Are things getting worse? So people know, their own circumstances, right? Yeah, well, I think the people at this conference are among the few people that are protecting themselves. They are at a gold conference, right? So everybody at this conference, I'm sure, has some gold, has some silver. They own some mining stocks. So the people here are not the ones that need protection. It's the people who didn't come here, that have no protection. Now, some of them may think they have protection because they bought Bitcoin, but Bitcoin, they're going to find out, is probably riskier than all the stuff they were worried about. They're going to end up losing more money in Bitcoin than if they would have just stayed in the S&P 500. But I think most people, especially retirees or near retirees, need to understand the risk of inflation and the devaluation of the dollar, and they need to do something about it. They should be buying gold and silver. I got Schiff gold, right? They could buy from me. They could buy, someplace else, but people have to own physical gold and silver, and they should have an investment portfolio that reflects the reality of what's going to happen to the dollar over time and the value of U.S. assets. And people need to invest globally. We've been investing for clients in international dividend-paying stocks. If you look at our core dividend payer strategy, year to date, it's up about 50%, which is a phenomenal return. This is probably the best year we've had in the 11 or 12 years that I've run the strategy. It's about triple the S&P. Most years, the S&P has outperformed the strategy, but now this strategy is destroying S&P. And I think this is the beginning of a major rotation out of U.S. stocks back into global stocks. So I don't think what happened with our strategy in 2025 is going to be a one-off year. I think it's the beginning of a trend that's going to last for many, many years. And so people should recognize this change and start moving money out of the U.S. stock market and investing in the markets that we're investing in our global strategies, because the valuations are much better, the dividend yields are much higher, and you get the tailwind of a weakening dollar, which I think is going to strengthen over time. And that's going to be one of the main reasons that foreigners are going to start pulling out of our markets, because they're going to have a headwind. They're going to be losing on the foreign exchange, and that's going to be subtracting from the returns on U.S. assets. So they're going to want to divest. And it's been foreign buyers at the margin that have really helped power the U.S. market for the past 10 years. And now they're going to be selling instead of buying.
As we look into 2026 from the vantage point of late 2025, the roadmap becomes clearer by the month. The Fed can talk tough, but QT ending is the tell. Once liquidity flows back into the system, intentional or otherwise, the metals market's ceiling disappears. Gold has already proven its resilience. What comes next is the phase where silver reclaims its historic role as the leveraged expression of monetary distrust. And in an environment where governments scramble to finance deficits and economies slow under tightening credit, distrust is the most valuable commodity of all. Silver's challenge has never been demand. It has been recognition. The market treats it like an industrial metal, even as investment demand quietly expands. When monetary stress combines with industrial scarcity, the repricing becomes abrupt rather than gradual. If Schiff's prediction materializes, 2026 will be the year silver breaks correlation models, breaks historical ratios, and breaks the complacency of investors who believed the metal would stay dormant forever. You don't get many moments like that in a generation. Gold will continue to do its job, preserving wealth, signaling risk, anchoring capital as the global financial system shifts into its next phase. But silver is the trade that captures the energy of the moment. It's the metal that responds when fear becomes action and policy becomes panic. And with the conditions forming now, end of QT, rising liquidity expectations, and global capital searching for safety, that moment may be closer than most investors realize. If Schiff is right, next year will not be a simple continuation of this year's rally. It will be an acceleration, a transformation, and possibly the most dramatic metals run of the decade. And for those paying attention, 2025 isn't the end of something. It's the beginning. If you found this analysis valuable, don't leave without subscribing and giving this video a thumbs up. This channel is here to prepare you for the next wave. Not after it happens, but before it begins. And if 2026 becomes silver's year, you'll want to be ahead of that move, not chasing it. Thanks for watching and see you in the next one.